Hello, everyone. Thank you very much for joining us once again. And we are discussing today economic substance regulations. What is the reason of our discussion about? You know this, we're discussing corporate tax law, then we're discussing, now we have started discussion of economic substance regulation. The important thing is 30th June 2023 is the deadline for the notification or for the reporting. So keeping in view the upcoming requirement of the law, so we have decided to have one session on the economic substance regulations. After this, we will revert back to the corporate tax law. So let's start the discussion. In the table of contents, we'll be discussing what is economic substance, what the reason of implementations, reason of revising law and related regulations, what the scope of ESR, compliance requirement, implications of non-compliance, what is the way forward, and at the end we will have your question and answer sessions as well. Out of the lot of sections of this, we'll go through this very quickly because the time is very limited. In most of the case, in most of the section, we'll discuss everything in detail. So what is the economic substance? The core crux of the economic substance is the taxpayer must have a substantial purpose. In other words, I can say the companies where the businesses and companies are generating the revenue, they must have the expenses, management, and core income generating activities there as well. This is overall, I can say this is a substantial purpose of the economic substance requirement. So what is the reason of implementation? The reason of implementation was base origin and profit shifting. Usually multinational companies, they shift their profit. There the possibility might be they will shift their profit from the high tax jurisdiction to the low tax jurisdiction. To control this thing, they have introduced the law, which is called economic substance regulation. It was introduced by the, we'll discuss in detail when different bodies was involved in the implementations of ESR. So this is just one example. In the first scenario, you can say this is a company A, this is a so this is a company A, there is a company B as well. There is a company A, this is a company B. This is a pre-planning. You can see their taxable profit after tax. Their tax was 150,000. The total tax they were paying 150,000. I can say, sorry, the total tax they were paying 50,000 and 150,000. And after the planning, they are paying tax on 80,000 and 60,000. So you can see the difference. This basically they have shifted their profit from the high tax jurisdiction to the low tax jurisdiction, and they have saved the taxes as well. Sorry for this. So bias for the control, just to control this, that's the shifting of the revenue from the high tax jurisdiction to the low tax jurisdiction. So the first was the publication of the initial report of BEPS by the OECD, Organization of Economic Cooperation and Development, on 12th of February 2023. Then G20 was involved, UN was involved, European Commission was involved. At the end, they've implemented the BEPS package to control this. Out of this BEPS package, the BEPS package was containing around 15 action points. Out of this 15 action points, the fifth action point was to control the harmful practices. And this economic substance regulations is part of the harmful, how to control the harmful practices. So keeping in with the requirement of the OECD, as I mentioned, UAE is a part of the FATF and OECD. So UAE has brought some laws. These laws initially, it was Cabinet Decision number 31 of 2019. Then they replaced with Cabinet Decision 57 of 2020. Then they brought the Guidance 215 of 2019. That it was replaced by the Management Decision 100 of 2020. So thus this was how to implement and how to move ahead and how to implement the ESR. What was the reason of revision? Reason of revision was basically to bring the consistency, provide centralized platform, better monitoring and compliance, and bring harmony. So what is, if I'm summarizing, there is a loss of revenue due to the BEPS. Tax evasion was due to the BEPS 15 action points for OECD and G20. BEPS minimum 4 standard, but OECD and G20. And this ESR was one of the points were addressed, how to address the harmful practices. Economic substance regulations were introduced, and UE brought the cabinet decisions and ministerial decisions. What is the scope of ESR? What you need to look at the scope of the ESR, the important thing, if the licensee earns any irrelevant income, then licensee is liable to satisfy the economic substance test. Licensee is liable to submit the notification within the 6 months from the end of the relevant financial year, and licensee is liable to submit the report as well within 1 year from the end of the relevant financial year. We'll learn what is the notification requirement, reporting requirement, and economic substance test requirement, and what is licensee. So these are the different definitions. You can go through this on the law, because keeping time limitation, I'm moving ahead very quickly. So licensee, basically, they say this is a juridical person. Legal entity might be this entity is incorporated in the UE, might be this entity is incorporated out of the UE. It can be unincorporated partnership as well, registered in the state, including a free zone and non-free zone that carrying out the relevant activity. This is the licensee, basically. So licensee, we can say this is a juridical person and unincorporated partnership, but there are some exception to the licensees. These are called exempted licensee. Licensee, that the investment fund is exempt. Tax resident, which is subject to tax out of the UE, that is exempt. And the company which is wholly and solely operates in the UE, that is exempt. And the branch of the foreign entity which is being subject to tax out of the UE, that is exempt. Sole proprietor, trust and foundation are not subject to ESR as well. So this is a very comprehensive, if I'm asking what it will fall in the scope of ESR, this is a very comprehensive slide on the scope of ESR. In the scope, this is for sure, this is not applicable on the natural person. This is not applicable on the natural person. ESR is not applicable on the natural person. So for a juridical person is concerned, this can be unincorporated partnership. The question is, are they carrying out any relevant activity or not? If they are not carrying any relevant activity, this is not applicable on them as well. Now the question is, they are carrying relevant activity. If they are conducting a relevant activity, means juridical person and unincorporated partnership, if they are conducting a relevant activity. Now the question is this entity, is this activity is exempt or not? If this activity is exempt, they must submit a notification only, which will be sufficient evidence for being exempt person. But in case they are not submitting the notification, then full-fledged ESR will be applicable on them. So in case they are juridical persons and they are the unincorporated partnership, they are not falling in the list of non-exempted licensee. Then next question, are they earning any relevant income? No. If they're not earning any relevant income, they need to submit a notification only and nothing more than this. But if they are earning any relevant income as well, then they will be subject to comply the ESR requirement. Means they need to submit the notification, they need to comply with the ESR test, and they need to submit the report as well. So in short, we can say, if this is the juridical and unincorporated partnership which is not falling in the list of exempted licensee, they are earning any income as well, they will be subject to notification, ESR test, and reporting as well. So for a branches UE entity, might be the UE entity has a branch in the UE, and if the branch is in the UE, it will be out of the scope because the parent, because branch is the extension of the main company. So branch itself doesn't have any legal personality. So branch in the UE, it will be out of the scope. If branch is outside the UE, then if the income is being taxed out of the UE, then it will be out of the scope. Otherwise, ESR would be applicable. So if the foreign entity have branches in the UE, might be foreign entity has branches out of the UE. If the foreign entity has branches out of the UE, it will be out of the scope of the UE ESR law. If the foreign entity has a branches within the UE, then we need to say either these branches are being subject to tax out of the UE or not. If these are already being subject subject to tax out of the UE, then it will be out of the scope. Otherwise, it will be subject to ESR. These are the regulatory authorities. You can go through this. Role of the regulatory authority is basically a role of the regulatory authority to collect, review, and assess the documents. A role of the national assessing authority is make the assessment, impose penalties, deciding appeals, and all these things. So what is the relevant activity? Now we have decided basically till now we have covered what is licensee, on which entity is ESR applicable, on which entity ESR is not applicable, which are the exempted licensee, which are the licensee which are subject to ESR, which entities need to submit the notification, which entity need to submit the reporting, which entity needs to comply the ESR test. This is what we have discussed till now. So now the question is, we have already discussed in our previous slide that if the juridical person or unincorporated partnership is doing any relevant activity, it was a question. So what are those 9 activities? If they are not doing any relevant activity, it will not be subject to ESR. But if they are doing any relevant activity, they will be subject to ESR. So what it falls under the relevant activities, there are 9 different types of activities which are subject to ESR, because every business is not subject to ESR. But if the non-juridical person and unincorporated partnership, they are conducting out of the 9, any one of these activities, then it will be called that they are conducting the relevant activity. These 9 relevant activities, banking businesses. In the banking businesses, this is if the business is accepting deposits and use those deposits in the giving loans or making an investment, then it will be assumed the person is conducting the banking business. Like bank offers the saving accounts and loans. Yes, they are in the ESR. Bank has a license to accept the deposits, but cannot grant loans and make an investment. It will not be subject to ESR because both of the conditions needs to be fulfilled. Accepting deposits and making investment or deposits, then it will be subject to ESR. In the third example, branch of a bank only provide assistance in the account opening and advice, because branch is not accepting deposit, branch is not making investment, it will not be subject to ESR. This is the insurance business. In the second category is insurance business, they said accepting risk by affecting or carrying out contract of insurance in both the life and non-life sectors, including the contracts with the insurance and captive insurance arrangement. Basically, if the insurance company is signing contracts and affecting contracts in the life and non-life sector, then and saving basically risk, accepting risk, then it will be assumed that the insurance company is subject to ESR. Otherwise, it will be assumed the insurance company is not subject to ESR. Important thing is the brokers, agents, and other businesses providing insurance related intermediary, middlemen, they will not be subject to ESR because they are just providing intermediary services. They are not accepting basically risk by affecting or carrying out any type of contract, because you know this, whenever the contract is being signed, contract is in between the main insurance company and ultimately end user and beneficiary. The middleman, intermediary, they are just helping it out to sign a contract between the insurance company and between the beneficiary, between the end user. So intermediary brokerage houses, agents, and other businesses that are providing intermediary services, they will not be fall under the ESR based upon the insurance activity. But insurance company itself, if the insurance company is accepting risk by affecting or carrying out contracts of insurance, it will be subject to ESR. These are 2 examples that were taken from the guide given by the FTA. Insurance company accepting risk and giving, and its regulated insurance company, yes, it will be subject to ESR. In the second category, insurance company is acting as an intermediary. We have just discussed that based upon this activity, it will not be assumed that the insurance company or middleman is conducting a relevant activity. Third category is investment fund management business. So if the entity, if any business is providing investment fund management businesses, and this is providing a discretionary investment management services, then it will be subject to ESR. Otherwise, it will not be subject to ESR. Now the question arises, what is discretionary investment management services? Discretionary investment management services, basically fund is taking the decision without the involvement of the related party, without the involvement of the customer. This is called discretionary investment management services. Other than this, non-fund, non-investment services, if the basically if the funds is providing any fund administration, custodian, advisory, other fund related services not considered engaged in the business of investment fund management, even providing a non-discretionary investment management services. Just look into this example, investment fund management service. Now the question is, fund is providing non-management services or fund is providing management services? We already just learned that if the fund is providing non-management services like fund administration, custodian, investment advisory services, it will not be subject to ESR. Now the fund is providing management services. There is a possibility the fund is providing discretionary fund management services or non-discretionary fund management services. In the case of non-discretionary services, ESR will not be applicable. It has been very clearly written in the law and guide. But in case of discretionary fund management services, where the fund is taking decision without the consent of the client, it will be subject to ESR. This is one example. In this example, there is the fund T. The fund T LLC is the limited partnership which owns that fund. Now the T Limited has appointed one company. One company is M LLC, which is providing discretionary management services, and they have appointed one company, Neo LLC, which is providing administration services. We already discussed that administration services will not be subject to ESR, and fund management services, if the MLLC is providing the discretionary fund management services, it will be subject to ESR. The fourth activity, the lease finance businesses. This lease finance businesses is very, very common, and it is applicable on most of the groups businesses. The important thing they are asking, if you are providing any kind of financing, any kind of credit against this financing, against this credit, you are getting any consideration, then it will be assumed that you are doing a relevant activity. If no consideration, then it will be assumed that no lease finance business. Important thing is, like one party is in the group, one party is giving a loan to the other party in the group, then it will be assumed that the company is doing the lease finance business, subject to the condition company is charging interest to the other group company. In the same way, entering into the finance lease in relation to assets other than land, it will fall under the lease finance businesses, pooling up the cash and giving some sort of interest back to the other related party. It will be assumed that the company is doing the lease finance business as well. Consideration is a very important thing. No consideration, no lease finance business. Consideration means lease finance businesses. If they are providing any type of credit or financing, it can be in any kind of consideration. So investment in bonds and similar security and a debt instrument are not on the regulatory exchange. It will not fall under the definition of lease finance business. These are the few examples that we have taken from the guide given by the FTA. In the first example, loan to subsidiary with 10% interest, yet it will be subject to ESR. In the second example, assigning loan without interest, no consideration, no ESR. So it will not fall under lease finance business. It will not be subject to ESR. In the third category, normal payment of the 45 days late payment interest. Now, late payment interest is not a consideration for the services. This is the penalty for the non-compliance or not fulfilling the respective commitment. So it will not fall under the ESR. Cost to cost financing by the triary company to its group companies, even they are charging cost to cost basis, but in the future they will not be able to do. Now the direct tax is coming, they need to charge on the market value, they need to apply the TP principle. But if they are doing on cost to cost basis, still law says it will be subject to ESR under the lease finance business. This is the headquarter business. In the headquarter business, this activity is applicable in case the company is providing the services to his foreign group company, and the company is liable, responsible for their overall performance, and companies are responsible for their overall group performance and success. If the company is responsible, and it doesn't matter, might be a parent company in the group, might be any branch in the group, might be any subsidiary in the group, but if any unit is responsible for the overall performance and the responsible for the overall success of the foreign group company, then it will be assumed that the company involved in the headquarter business. Otherwise, it will not be assumed the company is in the headquarter business. And how we will assume that the company has taken the responsibility, overall responsibility for the performance and success? We can see based upon this criteria, and this criteria is the provision of senior management services, assumption of control of material risk, substantive advice. Basically, head office or any other company in the group responsible for the performance, leadership, management, taking risk, taking initiative, taking decision on overall basis, they are responsible for their performance. Then it will be assumed that the company is involved in the headquarter business. Otherwise, it will be assumed the company is not involved in any headquarter business. So in the first example, you can say this is the PLC senior management team is based in the UAE. From the UAE, they are managing, making decision, taking risk through the procurement of external advice centrally. Then it will be assumed that the company is involved in the headquarter business. In the second category, there is a one company based in UK. The company has a part, there's a one company, FGH UAE, another company which is subsidiary in the KSA. FGH is providing all types of support to the KSA subsidiary, but the KSA subsidiary taking direction and taking management decision are being taken from the UK. Then it will be assumed that the UAE company is not involved in the headquarter business, because UAE company is not providing management services, not responsible for their performance and success on overall basis. But the UK company will be assumed that they are conducting the headquarter business by keeping in the respective laws of the country. This is a shipping business. This is a sixth relevant activity. Shipping business means licensee has one or more ships and licensee is operating ships. If the licensee is operating ship, then it will be assumed that the licensee is involved in the relevant activity of shipping business. If the licensee is chartering ship, it will be assumed the licensee is not involved in the relevant activity of shipping business. If they're the owner of ship, if they're the managing ships, it will not be assumed. Only function is operating ships. If the licensee is operating ship, then it will be assumed that the licensee is falling under the relevant activity of the ESR. Chartering a boat, beer boat, chartering, as I mentioned, it will not fall under the scope of ESR. But might be chartering a boat fall under the lease finance business because they are leasing the asset to another company. Then there's a travel agency, the international shipping agency, they're acting as a middleman. If they're acting as a middleman, it will not fall under the ESR. In the arrangement of goods to be transported, the company which is arranging the goods, it will not fall under the ESR. The important thing is if the shipping company is involved in the operation of the ship, it will be subject to ESR, and it doesn't matter who is the owner of the ship. These are the few examples. Operate ships from UAE to other GCC countries. Water LLC is operating ship. Yes, it will be subject to ESR. And Sailor Corp is only providing crew management services. As I mentioned, management services will not fall under the ESR. And third category, there is a charter LLC. They're providing two function, hybrid function. They are chartering ship as well as they are operating ships. The business of chartering ship will not be subject to ESR, but the business of operating ships, it will be subject to ESR. Holding company businesses, this is very straightforward and simple thing. If the sole function of the holding company is to acquisition of shares and equitable interest, and from there they are getting only dividend and capital gain. If these two conditions are being fulfilled, then we'll say the company is involved in the holding company business. If the company is doing any other activity, then we need to look into this. The company is doing a relevant activity, or company is doing irrelevant or non-relevant activity. But important thing is, if the holding company, the sole function is to make the investment, and from the investment they are getting dividend and capital gain, nothing other than this, they don't have any other revenue, then it will be assumed that the company is involved in the holding company business. And holding company is subject to reduced economic substance requirement. They are not liable to fulfill the full-fledged ESR test. We'll discuss in detail. They are subject to reduced economic substance requirement. But the possibility is that if the holding company at the same time they are doing other non-relevant activity. This is the same summary of the previous schedule. Now I have briefed everything in this schedule. You can look into this. This is a holding company. If the holding company investment in equity, you can see on the right side. If the holding company has investment equity, they have only investment in equity. From there, they are getting capital gains and dividend. It will be subject to reduced economic substance requirement. If the holding company is investment in equity, and other than this they are doing any other relevant activity, might be they are doing shipping business, might be they are doing banking business, might be they are doing lease finance business, might be they are the investment management services. So if the holding company is doing any other relevant activity, then we need to look into this, that other relevant activity is high risk intellectual property business. We'll discuss in detail what is high risk intellectual property business. If the other company high risk intellectual property business, then it will be subject to enhanced ESR requirement test. By default, it will be assumed that the holding company has not fulfilled ESR. They need to justify that they have fulfilled the ESR requirement. But if the other relevant activities non-high risk IP with the intellectual property business, then they will be subject to normal ESR requirement. But if the other activities, they are doing the investment in equity, other than investment equity, they are doing any other non-relevant activity, then holding company will not be subject to ESR. So we need to be very clear. If the investment equity only, reduced economic substance requirement. If the investment equity in highly risk intellectual property business, enhanced ESR requirement. Investment in equity and non-high risk intellectual property business, then normal ESR will be applicable. But if they are doing, along with the investment in equity, they are doing any other non-relevant activity, they will not be subject to ESR. Might be subject to investment in assets as well. Holding companies making investment in assets. If their investment in the immovable assets, it will not be subject to ESR. If their investment in the movable assets, then income from sale is not subject to ESR. Income from lease is subject to ESR. So I think everybody would be clear on this as well. So real estate owned by the holding company, but they basically one company have investment in equity. They own the real estate which they are using for business purposes. That it will not be assumed that they are doing any other relevant activity, but that real estate will be assumed that they are using this real estate for business purposes. These are the few examples. Only dividend income from subsidiary. Yes, they are involved in the holding company business. They will be subject to reduced economic substance requirement. Holding shares and conducting non-relevant activity, it will not be subject to ESR. Holding shares and given loan, which is the relevant activity, yes, they will be subject to normal ESR requirement. If the company is acting as a trustee, so it will not be subject to ESR, because holding company is acting as a trustee, and trustee is not relevant activity, so it will be assumed the company is not doing holding company business. Intellectual property business. So intellectual property business might be, there's a possibility that one company, this is the 8th intellectual property, the 8th relevant activity, might be the company has some intangible assets. From the intangible assets, the company is generating an income. This income can be in the form of royalties, it can be franchisee fee, it can be licensee fee, it can be capital gains. So if the licensee is using the intangible assets and from this they are generating income, there is a possibility that these assets can be high risk intellectual property asset or non-high risk intellectual property asset. If the assets are high risk intellectual property, then they are subject to enhanced economic substance requirement. By default, it will be assumed the entity has not fulfilled ESR. They need to prove all those documents, provide each and everything to justify that they have satisfied the ESR test. But if the asset is non-high risk intellectual property, we will discuss what is high risk and what is non-high risk. Then they will be subject to a normal ESR requirement test. So intellectual property business, it can be high risk, it can be non-high risk as well. So what is high risk intellectual property business? These are the all conditions given on the left side should be fulfilled. If all these conditions are being fulfilled, then we will say that the entity is involved in the high risk intellectual property business. And these conditions are, they did not create the intellectual property. First condition is the entity has not created the intellectual property, might be they have taken it from. Second, acquire the IP asset from their connected person or in consideration without developing research. The first condition is they have not created. Second is might be the entity has taken the asset from the connected person or from any person from where the entity has not invested in the form of research and development. And third, licensee has sold IP asset to one or more connected person or otherwise unseparately identifiable gross income from a foreign group company, then it will be assumed that the entity is involved in the high risk intellectual property business. Just I wanted to give you an example. There's one company based in UAE. That company has taken one asset from the USA company. Asset has been developed in USA. UAE entity has not invested even a single dirham in the development of the asset. All cost has been booked in USA. The company has taken tax advantage in USA because all expenses are being booked here. When expenses are being booked, our taxable profit will come down. It means the company is taking advantage by booking the expenses over there. Now, at the time of the generation of the revenue, they have transferred the asset to the UAE company. UAE company is issuing the invoices. So UAE company, first of all, did not create the asset. Second, they have taken the asset from the connected party, or might be they have taken the asset from any other party where they have not invested in the form of research and development. Now, this asset they are selling to the local connected person or any third party or foreign group company. Means this is very straightforward and clear. Expenses are being booked there, income is being booked here. So profit has been shifted from the high tax jurisdiction to the low tax jurisdiction. It will be assumed this is a high risk intellectual property business. It will be subject to enhanced economic substance requirement. So you can go through this basically from the, if you have a right in the intellectual property, the on overall basis, I can say basically if the entity keeping with the time requirement, I'm moving ahead very quickly. If this is a high risk intellectual property business, then you are subject to enhanced economic substance requirement. Otherwise, you are subject to normal economic substance requirement. So these are the examples. Non-high risk intellectual property asset, holding brand and earning separately identifiable income. You are holding brand. This brand, from the brand you are earning income. But if the brand is being used for business purposes, so it will not be assumed that you are holding the intellectual property asset. But if you are holding brand and earning separately identifiable income, you are offering the franchisee model, then it will be assumed that you are doing the intellectual property business. Holding trademark, using it for business purposes, it will not be subject to ESR because you are not generating separately identifiable income, but you are using the asset for business purposes. Non-high risk IP business, holding IT software, earning separately identifiable income. From the IT software, you have developed the software, you have given the software on lease, then you are earning income from the software, then it will be assumed that you are doing non-high risk intellectual property business. In the last section of Pharma Corp, is a resident company, earns gross income from licensing its patent from a new medicine to its group company located in Egypt and KSA. Pharma Corp did not create the patent. Important thing, they have not created it. And right were acquired from a group company. They have not created, taken a rights from the group company, selling to the foreign group company. It will be assumed high risk intellectual property business. It will be subject to enhanced economic substance requirements. Ninth activity is distribution and service sector business. In the distribution and service sector business, their distribution is a different thing. Distribution pertains to the goods and service sector related to the services. For the distribution, law is very clear. They said if you are purchasing the goods from the foreign connected person and you are selling it anywhere across the globe, means in the UAE or out of the UAE, it will be assumed that you are involved in the relevant activity. In the services, if you're exporting services to a foreign connected person, then still it will be assumed that you're involved in the relevant activity. So if you're importing services from your foreign connected person, it will not be subject to ESR. For goods import and export and local sale, it will be subject to ESR. Connected person is the mandatory condition for the goods. There, it has been given in the law, if you have any one-off transaction, it will not be subject to ESR. So these are the examples. Basically, buy furniture from foreign group company and sell. Yes, it will be subject to ESR. It will fall under the distribution business. Export of services of group company. Second example, yes, it will be subject to ESR. U entity recharges KS entity for one of his service costs. One of activities will not be subject to ESR. I will just discuss in our previous slide. So this is the second thing. First stage we have discussed. In the first stage, we have discussed the scope of ESR. In the second stage, we have discussed the relevant activities. In the third stage, now what is the compliance requirement? Compliance requirement, you need to just keep in mind, if the entity is doing relevant activity, now the question arises, it will fall under the, first of all, this is juridical person and unincorporated partnership. So if this is a juridical person, unincorporated partnership, if they are falling under the exempted list, it will be out of the scope of the ESR. Now, if they are not falling under the exempted list, now the question, are they earning any income or not? If they are not earning any income and not part of the exempted list, they will be subject to notification only. But if they're earning income, they will be subject to full-fledged ESR requirement. And full-fledged ESR requirement is they need to submit a notification within the 6 months from the end of the relevant financial year. They need to satisfy the ESR test. They need to submit the report within 12 months from the end of the relevant financial year. So in nutshell, we can conclude that if the juridical person or the unincorporated partnership is doing relevant activity, and from the relevant activity they are generating a relevant income which is not falling under the exempted licensing list, they will be subject to notification, reporting, and ESR test requirement. So first of all, compliance requirement is the notification. As I mentioned, they need to submit notification within 6 months from the end of the relevant financial year. And this is basically, if your financial year is 31st March, notification needs to be submitted by 30th September, June 30th, 31st December. If financial year is 31st December, you need to submit a notification within 6 months, which is 30th June. This is the requirement to submit a notification. I'm going through this very quickly. Second, now you have submitted a notification. Now you need to satisfy the ESR test as well. This is the most important and challenging thing in the whole ESR. If you are earning, if you are non-exempted licensee and you are generating relevant income, you need to satisfy the ESR test as well. And in the ESR test, the most important thing is SIGA, direction and management tests, and adequacy tests. 3 tests are there. The first of all, SIGA. Law says core income generating activities should be in the UAE. Second, direction and management means there should be management, at least one management meeting in the UAE once in a year. Third is the adequacy test. Adequacy tests fall under 3 categories: adequate employees, adequate expenditures, and adequate physical assets. So you need to satisfy all these tests. So 3 tests, as I highlighted, basically one is the functional test, which is a SIGA test. One is the management test. Third one is the adequacy test. In the adequacy test, third one is the adequacy test. In the adequacy, adequate employee, the adequate expenditures, and adequate physical assets. If the entity is satisfying all these tests, it will be assumed that the entity has complied with the ESR requirement. So in the functional test, licensee conduct core income generating activities in the UAE. You can outsource it to any other party as well, core income generating activity, but the other party must have adequate employees, must have operating expenditure, and must have physical assets in the UAE. Direction and management holding company business reduced. They're not required for the holding company because we have already discussed this is subject to reduced economic substance requirement, but their relevant activity needs to be directed and managed in the UAE. Adequate employee and adequate expenditure and adequate physical assets. These are the core income generating activities related to each activity. We have discussed 9 relevant activity: banking business, insurance business, investment fund management services, lease finance business. Then other than lease finance business, we have discussed headquarter business, shipping business, holding company business, intellectual property business, and distribution and service sector business. These are the 9 relevant activities. So against each 9 relevant activity, you can find the core income generating activities. As I mentioned, these core income generating activities should be in the UAE. So we have already discussed that the holding company is subject to reduced economic substance requirement in case of reduced economic substance requirement. Now it depends holding company, we have discussed already in detail. Holding company is doing only equity investment or equity investment plus high risk intellectual property asset investment, and third equity investment and normal, and fourth is equity investment plus non-relevant activity. So if you only equity investment reduce economic substance requirement, we already discussed everything this in detail in our previous slides. ESR test SIGA. Core income generating activities should be in the UAE. Employee expenditure. I think I mentioned already all these things there. If you need to do in the UAE, or you need to outsource to any party which has employee expenditure premises in the UAE. All SIGA are being carried out on the UAE. Abilities to you must have the ability to supervise to whom you have outsourced the SIGA. A licensee may outsource activities which are not SIGA to third party. Non-SIGA activities, basically sport function, you can outsource out of the UAE as well. There are no harm for this, but SIGA activities should be in the UAE. Direction management test, they said meeting minutes and knowledge and skills. The directors must have the knowledge and skills to run the business. They must have the minutes in the UAE, and meeting, at least one meeting should be conducted, board meeting should be conducted in the UAE. ESR adequacy test, I already mentioned three things are there: adequate employees, adequate expenditures, and adequate physical assets should be in the UAE. At the end, the reporting requirement, you need to go for reporting as well. And reporting, we know this within 12 months from the end of the relevant financial year, it will be subject to reporting. And while reporting, this is a template for reporting. Again, I'm going through this very quickly. This is a template at the time of the submission of report. Now, whatever we have discussed scope, we have discussed relevant activities, we have discussed compliance requirement. Now, if you are non-compliant the law, what will be the repercussions? If you are non-compliant, then fail to submit notification, penalty is 20,000. Fail to submit a report, penalty. First failure 50,000. Immediate subsequent 400,000 is the penalty. Fail to satisfy the ESR test, first failure 50,000, second failure, immediate subsequent year 400,000. Intentionally provide inaccurate information, then fine is 50,000. Persistent non-compliance, license annulment, they can cancel your license as well. Way forward, what we suggest you basically you need to go for proper impact assessment. First of all, you just need to assess either you are subject to ESR or not. After assessing this, then if you are subject to ESR, then we need to submit the notification. Then after submitting the notification, we need to assess, are we subject to reporting an ESR test as well? We have discussed everything in detail. The four major categories are there basically. First of all is the impact assessment. Second is submission of notification. Third is complying the ESR test, where we need to satisfy the adequacy test, management test, and SIGA test. And the fourth category is submission of the report on timely basis. Thank you very much for this. I think I have gone through this very quickly. Apologies, because the keeping in the requirement of the time, I had no other option but to go through this very quickly. If you have any question, you can drop me a message. Can you please share this presentation? Okay, drop me an email, Farhan Javed. I will send you the presentation as well. Any other question? You are most welcome. No more question. Thank you very much. I really appreciate your time and have a lovely evening. Thank you very much. Thank you. Bye-bye. Okay. Commission. Okay, I got few more questions. Two more questions I just received. First is commission I come. Can you please share the presentation? Commission I come. Okay. Kindly share the presentation. Okay. Okay, guys. Thank you very much. Thank you. Bye-bye. Have a lovely day. Thank you. Bye-bye. Okay, I think I got few more questions. Emails. Okay, you can drop me an email on my mahar@crestcooper.com or info@crestcooper.com. And the commission income earned by the company in the UAE. Commission income earned by the company. Commission income earned by the company in UAE. It depends, are you exporting service to a connected person? If yes, then it will be subject to ESR, otherwise it will not be. Okay, guys, thank you very much. Thank you and bye-bye. Okay, two more questions are coming. Okay. there will be any more session free zone corporate tax. Free zone corporate tax we have already covered in detail. You can send your questions. We can have one session on the question and answer. That would be much better. I'm thinking like this in the next webinar. So whatever the question that we're receiving from the company, whatever question that we're receiving from the people and from the market, we are planning to have one comprehensive session on the question and answer related to specifically related to the free zone.